In this part of presentation, we're looking at note number 3 and depreciation, how that is incorporated. It's a common adjustment that you have to make. And with depreciation, if you can't understand depreciation, it always be kind of like a hindrance to you in terms of your marks as well as acing the accounting paper, because you find depreciation income statement, depreciation will affect your balance sheet, depreciation will affect your cash flow calculations, especially when calculating investment in equipment or in fixed assets. So those are things that you need to look into, right? Right, so you're provided with an incomplete fixed asset note. Right, so in this particular note, you find that you have things that are missing. Right, you see this cost here is the opening cost at the beginning of the year, and remember in the trial balance, values for fixed assets is shown at cost, right? So if you have a trial balance, most likely you will see this figure here, unless if they tell you they give a date for the figure that they've given you, right? If they give you this figure, they will tell you in the notes that the new purchase not been accounted for, or if they give you that figure, they will put a date on. Then in the notes, in the adjustment, they will tell you that there was a new equipment that was bought, right? But normally you will see the closing. This cost is the closing. Same applies. This accumulated depreciation at the top is the opening. That means on the first day of the financial year, and this accumulated depreciation here is at the end. So we've got closing and opening and closing balances. Then in the middle, we have what you call movements. So same applies. This carrying values at the beginning, and this carrying values at the end of the year, right? So the adjustment says here depreciation must be written off on equipment at 15% per year using the diminishing balance method, right, which is very key. I take note that equipment with a cost price of 18,000 and a carrying value. So there was equipment that carrying a cost price of 18, carrying value of 12,000 on the first day of the financial year was sold, right? So that's account for disposal. So basically here we're dealing with disposal, right? So it's accumulated depreciation, it's depreciation note number 3, and disposal. Right, it was sold to the Director Timlo on 30 September 2019. Right, this date is very important, and the price was 4,000. No entry has been made of any of these transactions. Right, so one thing that I want to say, we'll start with this particular disposal. Right, disposals, right, or we can start with that's additional cost, additional additions at cost, right? We want to find out how much was bought during the year, equipment. That's the simplest in terms of this question. So here you have the cost price here at the beginning and the cost price at the end. So how much cost was added for vehicles, right? So basically you're going to say A, that is equal to 780,000 cost at the end minus cost at the beginning, which is equal to 180,000. Right, that will be equal to 180,000. Right, I'll show you the other way of proving it. Right, for instance, if you want to kind of like prove it here, right, the total movements here will be 138,000. That's negative, right? It's not 138 actually. So the total movement will be that will be 138, 180 minus 138. thousand. That will give you 180 minus 138. That will give you 42,000 positive. Because remember, 180 is this one here. Right, so the total movement. Right, so if you say opening carrying value plus movements, right, you get your carrying value at the end of the year. So that's 430, right? This will be 430 plus 42, which gives you 472. Right, that gives you this figure here. Right, so you can do that. You can calculate your movements. Then from your movements, you can calculate your carrying value at the end. Right, then I will deal with this figure when we're doing this example of equipment. Right, okay. All right, then B. Let's see B. Right, so B, we're calculating disposal. Right, we want to calculate disposal for B. Right, and disposal normally is done at carrying value. So disposal, that should be carrying value. And on this particular equipment, we're told the equipment was purchased for 18,000, and it accumulated depreciation of 12,000. Right, the year end was 31 December. Right, at the year end was 31 December 2019. Right, that was the year end. And this particular one was it was purchased on, it was sold on 30 September. Right, so we need to calculate depreciation first up to date of sale. So what we do is for us to calculate the carrying value, the carrying value will be 18,000. Let me just calculate depreciation up to date of sale. Depreciation date of sale, because we're using diminishing balance method, so that will be 18,000 minus 12,000, right? All this multiplied by 15% times 3/12. That's 18,000 minus 12,000. All this multiplied by 15%, right, which is this percentage, times, right, from January, if the year is ending on 31 December 2019, that means the year started on 1st of January, right? So if the year started on 1st of January, which means we're using this particular equipment from January to September, since we sold at the end of September. So it was in use for 9 months, times 9/12. So 18 minus 12,000, that's 6,000, and 6,000 multiplied by 15%, times 9 divided by 12. So this will be equal to 675. So the carrying value on date of sale, so this, the carrying value on date of sale will be 18,000 minus 12,675. So that is plus the 675. Remember, the amount that we're given it was say 12,000 on the first day of the financial year, so we needed to calculate depreciation up to 30 September and add it in order for us to calculate carrying value. So our carrying value will be 18,000 minus 12,675. That's 5,325. So that will be our B here, because disposal is at carrying value in note number 3. So it's 5,375. Here I say no, here there is 180,000. I then C now, depreciation. I'll get there now. Right. So when it comes to this amount, right? Once you've calculated this amount, is what we need to determine, because you're going to be doing the income statement. Was there a profit or loss on sale? Had profit or loss on sale comes in when the asset is sold, for a particular amount of price. So if it's a loss, that means the asset was sold below the carrying value. That means the selling price was below the carrying value. If there was a profit, that means the asset was sold above the carrying value. So our carrying value here is 5,325. Right, how much was it sold for? 4,000. So there is loss on sale, and the loss on sale is 5,325 minus 4,000, right, which gives you 1,325, and this is an expense. Right, this is an expense in the income statement. It's part of the operating expense in the income statement. If it's a profit on sale, right, that becomes an income under other incomes. Right, that will be form part of other incomes if it's a profit, but if it's a loss, it's an expense. All right, let's calculate C. Right, remember we're still using 15%. Right, we're still using 15%. So we need to calculate, the depreciation for the remaining equipment. Right. So what we need to do is, for us to calculate that depreciation, this is what we're going to do. Right, we need to take out anything that pertains to the equipment that was sold. So for our depreciation, this is equal to opening balance as 280 minus the equipment that was sold, which is this one. Let me just use a different color here so that they're color coded. So for our depreciation, that is C, that will be depreciation, that will be 280,000 minus 18,000. Right, all these are cost price. Right, 280 minus 18,000. Right, then minus 70,000. That's the depreciation. Right, this 18,000 is this here. Right, that's the 18,000, and 280,000 is this opening balance that we have, because there were no additions. Right, if the additions, we're going to calculate it in a more different way. Right, actually the amount for here, you see, is the same as this one, what we get from here. Right, then that's 17,000 minus 12,000. Right, because remember, this 12,000 that we're given here is still part of the 70,000 that we have as accumulated depreciation. Right, then this will give us 280 280 minus 180 minus 18, sorry, where did I get 180 from? Minus 18 right, you see it's the same as the 260, so you've got 262,000. So sometimes when you need to calculate, you can use this figure here, right? Minus 72,000 minus 12,000, that gets you 58,000. So all this is multiplied by what? 15%, right? So 262 minus 58, right, times 15%. That will give you 30,600. Minus 58,000 times 15%, 30,600. Right, that's the depreciation for the remaining equipment. Right, but for C, we need total depreciation for the year, which includes this particular depreciation that we just calculated. So total depreciation that is going to come to C, that will be 30,600 plus 675. Which gives you 31,275. So here we have 31,275. That's your C. Then just to complete this part, right? So your carrying value here, right? There's nothing here. So these are in brackets, right? These are outflows, right? So your total movement will be minus 5,375 minus 31,275. So that's 31,275 plus 5,375. So your total movement here will be 36,650. That's an outflow. Right, then your opening carrying value, right, that will be 210,000. Right, that's 70 to 80 minus 70. Right, then your carrying value here, right, that will be 210 minus, now I'm not adding, remember my movements are negative, so that will be 210 minus 36,650. So my carrying value at the end is 173,350. Right, then my accumulated depreciation at the end, right, there's a little bit of some work that you need to do for accumulated depreciation at the end, right, for equipment, right. Remember what we need to do is we need to remove everything that pertains to accumulated depreciation, right. You can calculate it using this, which is simple, right, but if you want to start the other way around, right, you can do it whereby we have the accumulated depreciation at the beginning 70,000, then we remove the 12,000, of the disposed of. Right, then we add this depreciation. Remember, we don't add the 675. This should be 5. We don't add the 675, those are plus 30,600, right, which gives us, so this is the disposed of accumulation of disposed of equipment. That's 70,000 minus 12,000 plus 30,600. That's 88,600. Then once you've done that, so 262,000 minus 88,600 to give you 173,400. And there's a 50 missing somewhere, I don't know where, but normally that's how you work it out, right? So this is how you work out your depreciation and everything. I hope you like this video, and if you do like the video, please do subscribe, like and share. Thank you so much.